Hello everyone, my name is Pavel. Welcome to Personal Finance and Banking Products. Today we'll be talking about business checking accounts. But before we start, I would like to say that all views expressed on this video are my own. They do not represent the opinion of any entity whatsoever with which I have been, I am now, or will be affiliated with. Business accounts are very similar to personal checking accounts. They have a lot of the same features. Business accounts do have a little more features. I'll be going over those in a second. The only difference that I can think of is that business accounts don't allow you unlimited transactions just like personal accounts do. And if you have a business, I recommend you have a business checking account. And the reason why is because you want to keep everything separate. You don't want everything mixed. Personal and business together. Now, it's not impossible to run a business without a business checking account, but again, when you go and do your taxes, your accountant will be grateful that everything is separate. And if everything is separate, that means they have to spend less time doing your taxes, meaning they should charge you a little bit less money. As I mentioned earlier, business accounts have a lot of the same features just like personal checking accounts do, like ACH payment, bill pay, e-bill, Zelle, mobile deposit, wire transfers, check writing. If you don't know what these features are, I recommend you watch my previous video. I explain a little bit what these features are so you can learn and see what they are. Now, business accounts have these features and more. For example, merchant services, ACH Collection, and night drop. Merchant services is the ability to receive payments from your clients using a debit card, a credit card, or electronically. Now, most banks offer their own merchant services, but there are so many other companies out there that specialize in merchant services, and you may or may not get a better rate depending on where you go. Now, some banks even have some merchant services built in their account. So as soon as you open the account, you can accept payments from your clients right away. But there are some banks that still require for you to be approved or qualify in order to have merchant services with them. And one of the requirements is to have a good personal credit and a good business credit. Now, if you don't know what credit is, don't worry. I'll be talking about credit in my next video. If you would like to receive payments from your clients using a debit or credit card or electronically, you may need a merchant service terminal. That's just a little machine where you swipe or tap or insert your credit card for your clients to pay you. Now, they can also pay you through your website electronically, or they can call you and you can type in the numbers in the machine and you can charge them that way. Now, some banks don't have same-day funding, or some companies, I should say, or next-day funding. But there are some banks that they do have same-day funding or next-day funding. And what that means is just pretty much that as soon as your client pays you, the funds are in your account. So obviously you want to look for something like that because obviously you want to get your money as soon as possible. Depending on who you work with, they're going to charge you different types of fees. Now, usually merchant services, they have two types of fees. One is flat, where it will stay the same, doesn't matter what happens, you will always be charged the same fee. And then the other one just varies depending on the transaction type or the credit card company where it's coming from. So for example, the flat fees are usually 2% plus 10 cents, or just the 2% per transaction, or they may even have a 2% plus 10 cents per transaction and then a monthly fee. Now, usually those monthly fees, they can be waived depending on the transactions that you do. So if you do a lot of transactions, the company may waive the fee for you. Or another way to waive it is if you process a certain amount of money per month, they will waive the monthly fee. Now, The variable fees are the ones where if it's a discovery card, it will be a certain percentage. You know, for example, it could be 2%. If it's American Express, it will be 3%. If it's a debit card, it will be different. If it's a credit card, it will be different. If you process the transaction manually, where a client called you and you typed in the numbers in the machine, it may have a different charge. So you just want to take a look and see what's best for your business. Now you have your one-time fees and your incidental fees. So a good example of the one-time fees are the PCI fee. So what that means is just a fee that the merchant services provider charge you to make sure you comply with the credit card security standards. Another one-time fee could be a setup fee. So that fee is just to set up your account, and not everybody charges that, but there are some companies out there that they still do. And then you also have your cancellation fee. So let's say you sign a contract for 2 years and you decide that you no longer need the product, or you found something better down the line, then now you may have to pay a cancellation fee. Now, one of the incidental fees is a chargeback fee. So pretty much when this happens is when a client requests a refund through their bank because they lost their credit card and somebody used the credit card and they weren't supposed to be charged. So now you're going to be charged a fee for accepting a credit card that was fraudulent, pretty much. Now you don't have to worry about this chargeback fee too much, because there is an insurance that you can buy separately in case things like this happen. So this is good for someone that has like a convenience store, where you have a lot of transactions of people just coming in and out. I will highly recommend you get the insurance if you are getting a lot of chargebacks. ACH Collection is the ability to go into your client's account and withdraw the funds they owe you automatically and put them into your account. Now for this feature, you do have to qualify. Usually some of the requirements are to be in business for 2 years, have good personal credit, have good business credit, and some banks still require you to have certain amount of revenue. So I can't really tell you that it will be the same everywhere you go, because everybody have different requirements. So you need to look around and see what's best for your business. Now this also have some fees, and they're very similar to merchant services. It could be either a flat fee or variable, depending on the transactions or the amount. NightDrop is a secure box that allows you to leave deposits overnight, and the bank will come and take the deposit the next business day and deposit it into your account. Now this is a good option for someone that doesn't have time to go into the bank during regular business hours, or for someone that has coins in their deposits and can't use the ATM. Now some banks offer this NightDrop no charge to their clients, but there are some banks that do have a fee to be able to use their NightDrop. Now some banks also require you to sign a contract with them in order to have access to the NightDrop. And then there's some banks that don't let you sign anything, and they just give you the key and you have access to the NightDrop. This is it, guys. Thank you for watching. If you feel that this video can help someone you know, please like it, share it. If you still have any questions, please feel free to reach out, and I will see you guys next time.